Welcome to the Real Estate Deep Dive with Paul D. Garrison from JP and Associate Realtors. Today we're going to be talking about how imbalances in the market create opportunities. In particular, we're going to be talking about the large number of buyers in the market actively looking compared to the smaller number of listings that are available. Normally I talk about real estate from a national perspective and national numbers, but for this particular deep dive I wanted to actually pull in some local information, in particular the inventory levels for the four major counties in the Metroplex. We have been in a strong seller's market for quite some time here in the Metroplex, with inventory levels bouncing between 2 and 4 months until recently when inventory levels in all four counties dropped below 1 month. This is a big part of why we're seeing such great home price appreciation this past year. Fewer homes on the market coupled with higher than normal buyer demand has created an imbalance, which in turn created a feeding frenzy where multiple offers per listing and homes selling for well above asking price has become the new norm. So of course, unless you've lived under a rock for the past year, this isn't really news to you. So I always like to keep things in context. So to help understand the inventory levels, anything that's less than 6 months of inventory is considered a seller's market. 6 to 7 months is a neutral market. Anything greater than 7 months is considered a buyer's market. The part that is news is summed up quite well by this quote from the M Report. The demand for housing in the United States has reached a fever pitch, a trend that opposes the norm of this time of year when the market cools as winter months set in. Traditionally, the late fall and winter months are slower in real estate because there are fewer buyers in the market, so fewer people list their homes around this time as well. Well, this year has been far from traditional. So this chart is put out by Showing Time, which is a service that books showings of listings. It's a monthly index, and it actually shows a number of people that are out actively booking listings at a time. So we can see a dip in the showings in the red, and that's when the pandemic hit and much of the country was in lockdown. The green bars actually are the really strong showing activity that we saw at the beginning of the year, kind of your January through April timeframe. Then as we all felt, it kind of softened a little bit when we're in those orange bars, kind of that May through September timeframe. But the big news is that we actually saw an increase in the number of showings in October. This goes against the normal seasonal trend. So again, I like to keep things in context. Here's a chart with the last 5 Octobers going all the way back to 2017. You can see that both 2020 and 2021 have seen higher than normal number of buyers out there looking at homes, a significantly higher number. This trend is actually summarized from a quote from Showing Time's VP and General Manager Michael Lane. Showing activity typically slows in the fall, but we've seen buyer demand remaining strong in many markets throughout the country to reverse the seasonal trend. Last fall, we saw an unparalleled rise in buyer demand, which makes October's year-over-year gains all the more impressive. So what he's referring to is obviously we had a significant jump going from about 112,000 showings to 182,000 showings in 2020. We actually even did better than that in 2021 with 183.7 thousand showings. So this shows that there's really still high buyer demand out there in the market. The trouble is they can't buy what's not for sale, which leads us to the next quote from the senior economist at Realtor.com. Realtor.com's 2022 housing forecast expects the winter months to be busier than usual, with momentum carrying into the new year. We also expect a growing number of homeowners to bring properties to market, taking some pressure off high prices and offering buyers more options. So what they're forecasting is that this is a great time. They're going to expect to see more home sellers putting their properties on the market because they're going to want to take advantage of that high buyer demand. The key takeaway from all of this is that this increase in supply is what's expected to happen, and it's expected to happen earlier than normal. Couple this with the data we looked at as far as strong buyer demand, and there is a good timing opportunity. The reason for this is we haven't hit the tipping point just yet. So let me show you what this looks like. In this chart, we're looking at the new monthly listing counts nationwide. You can see that historical trend in 2017 through 2019. New listings usually come on the market around the beginning of the year and climb to a peak in late spring. Then they start to decline through the summer and early fall, with a drop off fairly significantly in late fall and winter. Obviously, 2020 was an abnormal year in that it started out okay, but tanked when much of the country was in lockdown. Now, while it came back, it never really reached the same levels as what we saw in previous years. but it still followed the seasonal drop-off trend that's normal in late fall and winter months. So if we add in 2021, we see that it starts out much lower than the previous years, and it starts to creep up, but never really hits the previous levels that we've seen before. And it continues to follow that traditional curve, albeit at a lower level. So there's a lot of buyers out there actively looking for homes, but we just don't have a lot of new listings in the market right now. Now that doesn't mean it's not going to happen. Take a look at this chart from NAR. It basically shows that we've actually seen a decrease, a pretty significant drop in the average time or the tenure spent in a home by homeowners. So for several years prior to the 2008 housing crisis, the average tenure in the home was about 6 years. We've seen that significantly increase to about 9.2 years in the following years. But this year, we've actually seen that tenure drop to 8. So again, it dropped from about 10, average of 10 years in 2020 to down to 8. So that's a pretty good drop in just a short time. And a big reason for that is the recent gains in equity that we've seen and people capitalizing on that. Here's a quick chart from CoreLogic that shows the average equity gain year over year by state. So here in Texas, we're looking at an average of $30,000 to $45,000 in equity just year over year, so gained in just 12 months. So that's spurring a lot of sellers to start looking at, okay, how are we going to capitalize on this new equity? So jumping back to new listings, I wanted to share some local metrics rather than just the national ones, because I'm seeing another trend that is worth noting. Here are the new listings for the 4 major counties in the Metroplex. So note that for obvious reasons, Dallas and Tarrant counties have more new listings than Denton or Collin counties. However, when we look at the number of showings per listing in both Collin and Denton County have more showings than Dallas and Tarrant, with Collin County having a larger gap. This highlights another imbalance in our local market that has likely been caused by the pandemic and the shift to more employers allowing people to work from home. Now remember, imbalance equals opportunity. If you're considering selling your home in the next 12 months, now could be an excellent time. Let's connect and talk about your options. Many of the metrics and numbers in this presentation are based off of the national real estate market. However, local areas can vary. Please give me a call and we can discuss your situation. Have questions about your specific needs or location? Please contact me at 214-683-8188 or paul@pauldgarrison.com. Want more information about the housing market and related issues? Be sure and check out my blog at www.pauldgarrison.com. Thank you for your time. Please take a moment to visit our website at www.pauldgarrison.com.